This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Start of the second week of 2024. It's still expected to be a little quiet like how it was for the last 2 weeks or so. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, Prashant. Good morning, Nigel. Morning. And, we didn't get a chance to wish you a happy New Year. You're back after the break, and so are we. And I think it's been really volatile, a little tricky as well. We're heading into earnings season. Global cues are not that great. So maybe a little bit of caution is perhaps the need of the hour.
Well, we're waiting back for the institutions to come back to full strength. We are at least back to full strength. So let's see how this goes.
Absolutely. I mean, global markets were a little weak. Although it's just, US, for example, just had 4 days out of 250 working days. So it's too early to say anything in terms of, which way things go. But the point, beg your pardon, but the point is that the S&P was down about 1.5% over the last 4 sessions. That is, the last 1 week or so. But it's just maybe pullback of the last 15 days when US, especially the Nasdaq, S&P, etc., had a bit of a Santa rally. So that got pulled back. It's normal for markets to go through periods of digestion. Now, the other indicator, the other factor, I think, which is very, very clear is that investors are very aggressively pushing back on imminent rate cut expectations. If you remember, 2 months back, actually, say 3 months back, the expectation was that we will get 1, if not 2 rate hikes in 2024. That flipped very quickly to the market, expecting the first rate cut in March. So that is now being pushed back. You had the jobs data on Friday, which suggests that the first rate cut will be later than March. Not in March. Perhaps in May. Perhaps 2 months or 3 months down the line, but not in March. That's what the data suggests. You could look at the Fed minutes, etc., which came out last week as well. They were a little hawkish than the meeting itself indicated. Now, just one more comment I want to put out. This came in on the weekend, and I think this is important to note. This is the Dallas Fed president, the U.S. Federal Reserve, essentially saying that recent easing in financial conditions means, and I quote, "we shouldn't take the possibility of another rate increase off the table just here." Now, this is different from what we've heard over the last many weeks now. Markets are very focused and fixated on the fact that, we are at the cusp of a pivot. 500 basis points of rate hikes, and now a rate cutting cycle will start. So rate hike is nowhere in anyone's forecast, but this comment was made on Saturday by the Dallas Fed president. Let's just circle back to the levels here. Now, the Nifty was flattish last week. We were down about 20 points or so, Friday to Friday. And we closed around the 61.8% retracement of the recent fall, the recent, small fall that we had. What is that level? That level is 21,705. And as long as we left off at 21,710, as long as the Nifty, we basically need to sustain above this level, the 21,705 level. And if we do that, and we're able to build on it, you basically can target the 21,834 level, which is the recent high, and 21,970 then on the upside. But we need to first sustain this 21,705 level. On the downside, the support comes in at the 20-day moving average, which is at about 21,400, 398. That's the support. And a decisive break of that, that's still some distance away from where we left off on Friday, will indicate perhaps the beginning of a bit of a downturn. Remember, we put this piece out towards the fag end of December. January seasonally is a weak month. We've not had, a January where December was so strong as the December we had in 2023, and January turned out to be a super month once again. But we'll see that seasonality at play. The Nifty Bank Nifty, that posted a negative weekly close. Support for the Nifty Bank, again, at the 20-day moving average, which stands at 47,801. We left off at 48,160. On the upside, the recent high is 48,636, which the Nifty Bank, hopefully we'll see before we see a downturn. We get into earnings season this week, and I think that perhaps more than anything else, at least will determine the very near term. Remember, IT will kick it off, and IT, I don't think there's anything dramatically different expected in the quarter, in the October to December quarter, when these companies start to report. Commentary, etc., will still perhaps should be as cautious as it has been over the last couple of quarters or so. Add to that the fact that the global picture has been a little weakish over the last 4 days, and maybe, the setup this morning is of a mild, muted kind of start. So about 30 points lower is what we have. Watch those levels as we begin another fresh new week. Sonia.
Oh, absolutely. And, the strong US jobs data that came through, right? I mean, that perhaps is giving rise to some worries that maybe the rate cuts may get delayed because of how strong the situation has been. And that's giving a little bit of caution in the global markets. Hong Kong, by the way, I just want to pull up the Hong Kong market. It ain't looking good this morning. So just pull it up. I think it's a 1% fall that I've seen as of now. The implied, there you have it, 1.5%. So Asia is not looking good. And for our own markets as well, the start will be in the red. Now, earnings season begins this week, so all eyes are going to be on that. Don't have any high expectations from the likes of Infosys and TCS. They come out with their numbers on Thursday. There's Wipro, HCL Tech on Friday. There's DMart on Saturday. So lots happening this week. The numbers on an average, brokerages are expecting a fall of around 2% quarter on quarter in the revenues, dollar revenues for a company like Infosys. TCS is expected to be flat. But is there any positive surprise coming in terms of the commentary? That's perhaps something the street is looking at, because both of these stocks, Infi and TCS, have been up about 5.5% in the month gone by. So is there a positive surprise coming? That's the big question. Bajaj Auto is also in focus later today because they will be announcing details of their buyback. There's a meeting at 4:30 p.m. in the evening. The size, price, everything will be announced. Remember, it was a big mover last week. Tata Steel in focus, and Nigel will tell us more about that. But best ever quarter in terms of crude steel production, etc. So keep an eye out on a couple of these names. Titan, Nika also coming out with business updates. But the Nifty has been holding on to 21,700, and we've seen a second day of large FII buying on Friday. So FI has bought about 1,700 crores in the cash markets, while DI has sold about 3,500 crores. So let's see which way it goes. Things could get volatile as we get a lot of data points, and this morning the early start could be in the red, and then we'll take it from there.
Well, I think the Nifty is in that range, right? The 350, 400 point range, but I think you want stability coming from the global markets. And what's worrying out there is the tech-related stocks. The big tech stocks, valuation-wise, they're not in support. That's point number one. The second factor is the global equity market participants itself, they're a little uncertain with regard to what the Fed will do next because of the economic data that's been stronger than expected and the commentary that's come out as well. So the quantum as well as the timing of those rate cuts is something that the street is a little bit skittish on. And the third factor is this Red Sea conflict. We're brushing it aside, but maybe it could impact trade maybe for a little longer than expected. You want a resolution out there. So those are the three broad factors that are making the global equities a little nervous. What do the FIs do, though, in Friday's trading session? They covered some mild shorts. They added some long positions. They continue to remain net long, with close to around 67% of their positioning on the long side. I was looking at the options data, and that's giving me that confidence that maybe we're in this 400-point range. 21,700 call, fair bit of action out there. 21,500 put, fair bit of action out there as well. So just punching in those numbers, the range that you come to is close to around 21,450 on the downside, and on the upside, 21,850 odd. Remember, Realty and Pharma, both of them have started off 2024 in style. So there'll be themes that will play out. So look for those themes. Maybe on the headline index, you'll see a bit of a consolidation. But individual sectors and stocks can do a thing of their own. Like we saw the mid and the small cap indices, yet again, they outperformed in a week that the Nifty ended more or less flattish. So what do you track from here on? The Q3 earnings, well, they kickstart. Second half of this week, we'll get the tech-related names. So they'll come out with the serum numbers. There'll be a few mid-caps as well. They'll be coming out with their numbers. And remember, mid-caps have run along a good deal. So you'll want to see that stock price movement match up with what they're seeing. The earnings should match up with the stock price movement. That's something that we'll be tracking as well. And US economic data continues to remain in focus. The commentary coming in from the Fed as well, that's going to be important. For starters, the GIFT 50 suggesting we pull back a little bit. I think there was a mild downtick, 20-30 point downtick. I think we're still in that range, So if you want to buy, you buy at the closest end of the range, you sell at the higher end of the range. But otherwise, you stick to sectors, stick to stocks, and look to build a good portfolio.
Absolutely. And I think through the end of the week, you'll get more details on IT earnings, and then maybe you can take a call on that sector as well. But lots coming up. First up, we have a view from Rhythm Desai of Morgan Stanley, who says some of their technical indicators are approaching the sell zone, but not all, even as fundamentals are at just about mid-cycle levels with more upsides in the coming quarters. He expects a further rise in volatility. He says they are overweight financials, technology, consumer discretionary and industrials, and are underweight other sectors. That said, he adds the macro trade could peak in the coming weeks.
Okay, let's get you some money market views as well. B. Prasanna of ICICI Bank says stronger than expected labor data in the US at the start of the year helped the dollar recover from lows. However, he adds, poor ISM services number hurt the recovery and broad trend of dollar weakness remained intact. He says the rupee was range-bound as the RBI continued accumulating the dollar. He also goes on to add, seasonal flows and a subdued dollar will help the rupee catch up in coming days, and he expects the USD INR pair to trade in a range between 82.85 to 83.35 with an appreciation bias.
All right, and on the bonds, B. Prasanna says global bond yields retreated from the recent lows owing to strong labour data and heavy supply calendar in the new year. He says local bonds saw a similar impact as higher than expected SDL calendar and continued pressure on deposits resulted in bond yields moving higher. He says the markets will be watching out for inflation prints, both domestic and global, before taking a firm view. He also expects the markets to consolidate for the time being, with a 10-year benchmark bond yield likely to trade in a range of 7.15 to 7.25%.
Well, we've got a lot of stock-specific action to track for you. We'll get to that in just a bit, but for the time being, we run you through our top 10 list. We're looking at Tata Steel, Godrej Consumer, Nika, Union Bank, Spark. All of them will be reacting to positive news flow, while we'll have 5 of them that will be reacting to negative news flow, namely Titan, Federal Bank, Marico, Adani, Wilmar, as well as Bank of Baroda.
All right, well, those are stocks which our research team will get to you in just a bit from now. But our first guest on the program is Harold van der Linde, Head of Asia Equity Strategy at HSBC. Harold, good morning. Great to have you with us here. Thank you very much for your time. Prashant this side, and wishing you, your team, your family a happy new year. First week done and getting into the thick of it now, kicking off the second one. Harold, I was looking at the latest report that you have put out at HSBC, and you're pretty positive on emerging markets, on both China and India, and you detail out all these reasons why India looks good. It's a market which has done well historically, and you feel there's no reason why it should not continue to outperform actually. But before I come to that, I just want to start with just one point about what's happening with this back and forth about US rates. We had the Dallas Fed president on Saturday talking about, a rate hike. Maybe it's just to scare the market off, not to price in rate cuts in an imminent fashion. Or is there more to it? What's your sense?
No, first of all, you also, Happy New Year. Thanks for having me on, of course. I worked actually through December. So we had a couple of reports out on markets, just as you highlighted. I hope you had a bit of a break. But let's go to the Fed first and then talk about how to look at India maybe. We've had, while I was working, all my colleagues were on holiday, we had like a massive decline in bond yields. And we spoke about this last month already, but this has continued, right? So we've seen these bond yields going from 5 to below 4 in a matter of only a couple of weeks' time. That, of course, has lifted global equities and tech in particular and these sort of things. But if you then looked at late last year, by the last day of December, when we looked at the number of rate cuts that were being priced in by the market, that was quite a lot, much more than what our economists were forecasting. And I think you now see some of these economists coming out and say, hey, wait a minute. There will probably be rate cuts, but maybe not as much as what you're forecasting. And I think we have our economists who are talking about it. We've seen people in the US, prominent economists talking about it. I think someone's made some comments on it. But some people from the Fed as well. And the market is recalibrating. December is a time of low liquidity, so prices can move very quickly. Early on in the year, people said, hey, we've gone a little bit too far. So now we see these bond yields creeping up and the equity markets coming off again. But I think this is a temporary sort of thing. This will continue maybe for, who knows, maybe 1-2 months or something like that, maybe even a little bit longer. But that's then where we stand. And then I think these bond yields can, as we go deeper into 2024, they can go a little bit lower again from where we are at the moment. But in the meantime, we need to recalibrate. So that means that in the very near term, maybe the equity market outlook, in particular in the US, might be a little bit muted.
All right. So you're still bullish on India, but the equity move in the US might be a little muted. And within the Indian markets, where do you see opportunities, Harold, both in terms of valuation as well as growth headroom?
Yeah. So just to put it slightly in context, we like China, we like India, but for completely different reasons. China is a market where the direction has been flat to down, right? But there's a lot of different stocks that move in different directions in China. So this is the sort of approach that you want to take in China. In India, it's almost the other way around. That market performs very well. If you know your stocks, you can, of course, go deeper. But it's a market where I say you buy into dips. So if we see over the next, say, 1 or 2 months, these markets coming up because of all the global reasons that I mentioned, I think India would be a market whereby I say, hey, that's a market I want to buy into. So we continue to like both markets, but India for very different reasons. There's a couple of other positive trends going on in India as well. The market is broadening. There's more locals who are buying it, but also they're going to small and mid caps, so the liquidity is broadening in the market. There's a lot of positive things going on with Indian equities, and I think people should look through near-term weakness and look at those positive factors going forward.
Good morning. Good to see you in as always. Hello, a couple of quick points. Then, with regard to the Fed, how many rate cuts are y'all factoring in as a house? Point number one. Point number two, India is the longer-term story. But in the near term, do you think that China can outperform India going by the valuations and the stark underperformance?
Yeah, so 2 questions. First on how many rate cuts are we seeing rate cuts? We see everything in the second half of the year. And the market was already saying, oh, they're going to start cutting in March. So that it's also a timing issue that's of importance. So budgets will come down, but not as soon. And probably we're going to be in a bit of a holding pattern on that particular front in the very near term, probably 3 months or so. And no, what was the second question again? That was about India, but I forgot what it was. Can you repeat it?
Yeah, in the near term.
Oh, India in the near term. Yeah. No, all equity markets will struggle a little bit with that global backdrop, right? But you had last year earnings growth in India was 26%, at least the indices that we're looking at. That is pretty good. It will slow down in India. What you see in India now is I think we're seeing some limits to the growth in earnings growth coming through. The bank's loan to deposit ratio is high. That means that to extend more loans and fuel that growth, they need to do something on the deposit side. That means increase interest rates, maybe a little bit on deposit to get them in. Or if they don't want to do that, maybe not extend as many loans. So I think those loan growth numbers might maybe moderate a little bit. That means that the growth in the private sector is going to moderate a little bit as well. So the earnings growth, I think, is going to come down in India from pretty high levels. But we're looking at something like 18% for this year, 2024. That is pretty good. So if we see a little bit lower valuations and that earnings growth profile is going to stick up there, yeah, then I think, hey, this is a market you want to buy into the dips that we see. So this is a great opportunity maybe to reassess what you want to buy as these global factors are going to maybe weigh on India in the very, very near term.
Okay, that's going to stay with us. This is a market that you want to buy into, and this is a great opportunity to reassess what you want to buy. Thanks a lot, Harold, for joining in and speaking to CNBC TV18. Well, that's an optimistic view on the Indian markets. That's Harold Vandalen of HSBC saying they like India, and within sectors they like autos, retailers, real estate and the telecom space. Let's slip into a quick break. On the other side, our entire team will be with us to help us with the list of top 10 stocks. Stay tuned. Welcome back. We kickstart a brand new week with plenty of stocks to talk about. First on our radar is Titan. Let's find out how the business update was this time around. Mangalam is here to tell us more. Mangalam, morning.
Good morning. So, Titan for the third quarter, the street was anticipating strong growth given the festive season as well as the wedding season as well. The company reported a 23% growth in their jewelry business. The street was anticipating a little more than that. Why is that? Because same time last quarter, the company grew by about 11%. So this makes the 2-year CAGR at around 16.8%. For perspective, Kalyan Jewelers grew around 25%, and Titan's own growth in the second quarter, despite Adhik Maas and Shravan, etc., was 19%. So maybe hopes for the third quarter were a little higher. Additionally, the company said that growth in plain gold was higher than studded, so that may impact margins in the third quarter as well. But what's good is watches and wearables grew by about 21%. Carrot Lane grew by about 31% itself. Eyewear declined by 3%, so that's a bit of a concern. And emerging businesses, which have been very fast growing,
have grown just around 24% itself. The stock is at near all-time high, so mild disappointment may leave some room for a bit of downtick.
Okay, all right. Thanks a lot for that, Mangala. Well, I'm looking at Tata Steel, and they came out with their operational update. It normally doesn't move the stock too much, but the India business numbers look quite good, so that's what I'm expecting a move in the northward direction. Let's run you through the numbers first. We're looking at the deliveries data first up. And the India business, well, out there, you had on a sequential basis as well, there was some growth. So I like that. And they say that they've delivered their best ever Q3 number, so that's good. In addition to that, the domestic business has done well. And within the domestic business, you have the automotive as well as specialty products business that's grown by close to 8%. The entire numbers grew by close to 3%, but this automotive and special products is up 8%. So that's good on the margin. So that's positive out there. The Netherlands business, they continue to struggle because they had the realigning of one of their blast furnaces. But on a sequential basis, there is some mild improvement telling you that things are coming back to normalcy. So that's good news. UK, though, continues to struggle because demand is, quite subdued out there. So all in all, I think these numbers, they're more good than bad. That's why I'm going with some green. But Mangalam, coming back to you, Nika as well as Godrej Consumer, they came out with their operational updates. How do you read that?
Well, for Godrej Consumer, it is a decent performance. Why do I say that? Because it's not very different from the second quarter. On a consolidated basis, the company will report mid-single-digit volume growth. Low single-digit sales decline largely because of currency depreciation in Africa as well as LATAM. Importantly, the margins for the company will expand year on year, and that will continue as it has in the last couple of quarters. India, the operating environment is similar to the second quarter. Despite that, the underlying volume growth organically has been mid-single digit, and reported volume growth, largely because of the Park Avenue acquisition, will be in double digits. So that's a positive. Indonesia is also coming back in style. Reported double-digit volume growth and high single-digit sales growth out there. Africa had flattish to mildish decline, and that's because the company is restructuring the business out there. So that was pretty much anticipated. As far as Nika is concerned, good performance coming in from their beauty and personal care business as well. Mid-20s sort of GMV growth and 20% net sales value growth. The fashion business, which has been a growth driver for the company, has grown around 40% on a gross merchandise value business and almost 35% on net sales value business as well. So overall, the revenues for the company have grown at around 20% and that should be a positive.
All right, Mangalam, thanks very much for that. Let's move on from FMCG and consumer businesses to banking. Federal Bank has got an important update with regards to sort of top management and what may happen there from here on. Ritu's got more details, updating us on Federal Bank. Ritu, morning.
Good morning, Prashant. Shyam Srinivasan has helmed Federal Bank would have helmed Federal Bank for 14 years when his current term ends later in September this year. And it is unclear at this point whether he will be able to continue as MD and CEO beyond that. And that is simply for the reason that the RBI wants the bank to undertake succession planning. Now, in October last year, the bank had written to the RBI seeking a one-year extension for Shyam Srinivasan until 2025, keeping in mind that overall cap of 15 years for bank CEOs that RBI has set. However, RBI in its response to that letter has neither said a yes or a no to that request for extension. It has written a very short letter stating that the bank must send a fresh proposal indicating at least 2 fresh names for an MD and CEO candidate, keeping in mind the longer-term interests of the bank. And the board has taken this letter, on board, and it is now proceeding with the same. Now, we've been speaking to our sources to understand why this response from RBI, and it seems, that even if Shyam Srinivasan is granted an extension, he can only continue for only 1 more year, given that 15-year cap. And so, for the stability of the management and in the longer-term interests of the bank, RBI wants to consider fresh candidates as well. There's no other reason, why the RBI may not want to grant an extension to Shyam Srinivasan. In terms of who the internal candidates could be, the obvious names are Shalini Warrior and Harsh Duggar, who are currently EDs of the bank and are seen as names that could be considered by the board when it prepares that list to be sent to the RBI.
Okay, all right, Ritu, thanks a lot for that update and belated happy birthday. Hope you had a good one over the weekend, Ritu. Well, going back to Mangalam, he's the busy man today. Plenty of operational updates coming in there. Mangalam, tell us about Marico as well as Adani Wilmar.
Well, for Marico, it's a slightly softish update. Why do I say that? Because again, the consolidated revenue for the company declined in low single digits. At the same time, domestic volumes too grow in low single digits as well. This at a time when most companies are reporting mid to high single digit volume growth. It's the Parachute coconut oil business which registered low single digit volumes. Saffola had an optically weak quarter owing to a high base and cautious trade sentiment as well. And value-added hair oils, that posted, again, low single-digit value growth. So as a result of which there is weakness. What's done okay for them is the foods and premium care business, but that has been doing well for them over the last couple of quarters as well. There has to be gross margin expansion, but the company will plow some of that back into advertisements as well. As far as Adani Wilmar is concerned, out here as well, the company said that they reported record volumes, but overall volume growth in the third quarter has been just about 6%, and the decline for the company's revenue has been around 15%. Edible oil, which is the mainstay of the company, out there, the revenues have declined by 21% and volumes are flat. Why is that? Because the company said there was subdued environment in the institutional area. As far as B2C businesses are concerned, branded edible oil, they gained market share. That grew 4%. And food and FMCG, which again has been growing at 40% over the last many quarters, grew just around 28%. So expect some red on both these stocks.
All right, Mangalam, thanks very much for that. Well, Bank of Baroda and Union Bank are the next two companies we're talking about. Abhishek is going to tell us why. Abhishek, morning.
Morning, Prashant. To begin with the Bank of Baroda, they came out with their Q3 FY24 provisional number in terms of business update, and they are struggling for deposits. It's perhaps the only lender to see deposits decline quarter on quarter, and no wonder you saw them recently raise, the short-term deposit rates by as much as 125 basis points. So deposits are up 8.3% YOY and down about 0.3% sequentially. Domestic deposits, they are up only 6.3% YOY and a decline of 0.6% quarter on quarter. Advances growth, that is also below the system level, coming in at 13.6% YOY and about 2.5% sequentially. In this, the domestic loan growth has been about 13.5% YOY and about 3.3% sequentially. CD ratio has improved both YOY and quarter on quarter, which augurs well in terms of net interest margin remaining on the healthier side. Union Bank of India, strong loan growth seen in terms of sequential performance. Deposits are up 10.1% YOY and about 3.1% sequentially. Domestic deposits are up 8.5% YOY and about 3.05% quarter on quarter. Domestic CASA ratio does declined on a YOY basis but improved on a sequential basis. Advances growth 11.44% YOY and about 5.8% quarter on quarter. In this, the domestic advances were up 10.7% YOY and about 5.5% sequentially. So sequential strong loan growth could work in favor of Union Bank in today's trading session. Back to you.
Okay, sequentially strong loan growth. Thanks a lot for that. So that's on Union Bank, but Vivek is also with us to tell us about Spark and why he's watching that one. Vivek, over to you.
Well, absolutely. So Spark, Sun Pharma advanced. Now, whole of last week, the stock was excited given the fact that the management had indicated a call to be held with analysts on Saturday regarding an update on the treatment plan and the study that they're conducting to treat Parkinson's disease. So the outcome of the call, as well as, the outcome of the study has been quite positive for Spark. So what the company indicated to analysts was that, number one, the Phase 2 consultation has been completed, the US FDA as well as other regulatory agencies, which is a positive read-through. Number two, they're saying that the completion of the long-term extension study 2 has been done. So now going forward, the Phase 3 trials will start. Along with that, the company has said that they are looking to finalize and execute a partner strategy. And along with that, the company is looking for further resource mobilization, which includes fundraising. Now, remember, the company requires to go ahead and complete studies required by regulators to go ahead and file for the NDA. So an exciting prospect as far as Spark is concerned. Now, along with that, the company also was part of the JP Morgan Healthcare Conference. They mainly updated about this particular molecule itself, for the treatment of Parkinson's. They also said 2024 offers multiple clinical proof of concept readouts.
All right, thanks a lot for that. Well, here's a quick recap of our top stocks. Stocks with positive news flow. There's Tata Steel, Godrej Consumer, Nika, Union Bank and Spark. While stocks with negative news flow, there's Titan, Federal Bank, Marico, Adani, Wilmar and Bank of Baroda. But the National Statistics Organization has released its first advanced forecast for India's GDP growth in FY24, expecting the economy to grow at 7.3%, higher than RBI's latest 7% forecast and also higher than CNBC-TV18's estimates of 6.8% growth. Lata is here to tell us more. Lata.
Oh, it's absolutely a stunning forecast that's come from the NSO, and it's a very reliable number because it comes from the preeminent statistics body. Of course, better than the CNBC poll of 6.8%. So On the street now, economists are scrambling to up their forecasts, with RBI also at 7. But you must just look at the difference. The first RBI forecast was 6.5% when they made it in April 2023. And at that time, they were laughed at as optimistic because the street was at 6%. Look where we have come. It's a stunning story. But just a little bit in terms of the budget, there is a problem. The whole reason why the advance estimate is released is to ensure that the budget keeps that 5.9%. Now, in nominal GDP terms, that is inflation plus real GDP, the growth is only 8.9%. So the economy will be, the value of the GDP will be 296 trillion as of March 31st. Now, the budget had budgeted that the nominal GDP would grow by 10.8% to 302 trillion. So now 5.9% of a smaller number like 296 trillion would mean that the fiscal deficit will have to be lower by 37,000 crores compared to the budget. Not a very difficult proposition for the government, but just to point out. The positives in the NSO numbers, there are many, of course. The headline is a big positive, 7.3, but that has been made possible largely because of industry. Industry is growing at 7.9, and that's pushed by electricity and mining growing at over 8%. In services also at 7.7 is a good number, but within that, finance is doing extremely well at 8.9%. And all this is also buttressed from the expenditure side by government capex. That's huge. Capital expenditure is growing at 10.3%. It's double digit for the last 2-3 years. So that's positive. What's not working is that all the employment-heavy sectors are not showing growth. Agriculture and allied services, horticulture, forestry, all that, just 1.8%. So this big growth is not going to about half the population. Within services, trade, hotels, transport, your Udupi hotels, ST buses, small taxis, that's growing at only 6.3, much lower than where the overall GDP is. And finally, if you look at consumption, capital expenditure is pushing up the economy, not consumption. That's growing by only 4.4% and 4.1% government consumption, which means this big growth doesn't appear to be trickling down and leading to higher consumption. At some point, capex will stop if it doesn't see enough consumption. That could be a worry.
All right, Lata, thanks very much for that. But that's a impressive kind of upgrade that we've seen over the last 1 year to full year F524 growth expectations. So that is the macro for you. We'll take a quick commercial break here. We'll be joined by Prakash Diwan. We sort of turn our focus back to stocks, sectors which should be in focus. We'll also have Prabal Sen, energy analyst at ICC Securities, and we discuss his views on upstream and downstream oil companies. Stay with us.
Welcome back. Hope you're having a good morning. Well, in the next half hour, Rod, we'll have the pre-open rates. But for the time being, plenty of stocks to discuss. So let's welcome Prakash Diwan, who joins us on the show. Hi, Prakash. Morning. Thanks so much for joining in. Well, Prakash, let's start off with Titan. You have the smaller player, Kalyan Jewellers, that came out with their operational update. And on a smaller basis, that's looking good. In fact, if you look at it in the last 1 year or so, Kalyan Jewellers is the one that's seen a big re-rating. How do you approach Titan, though? They have come out with their operational update as well. Valuations, it's not cheap. It's never been cheap. But your approach to this theme and particularly Titan?
Good morning, Nigel. The kind of this in jewelry, I mean, it's relative to expectations, to be honest. There's nothing alarming about it. But even with these numbers, it ends up doing a CAGR of 16.5% for the last couple of years. So, for a base like Titans, to be able to grow consistently at this rate is always going to be challenging, and they still manage to overcome that challenge. For the likes of Kalyan Jewellers and some of the other smaller players who are seeing some expansion in their reach and product mix, you will see certain gains. But today, look at where we are from a positioning perspective of the market. Everything is kind of stretched in terms of valuation. So if something were to go wrong, if the market gives into some sort of vulnerability, it's the smaller ones which will probably lose more ground. So, so from that perspective, Titan continues to qualify as a portfolio stock.
Okay, I think there's
And
some issue
in terms of newer lines of businesses that they have. So,
Okay,
so let's be very clear. Titan will be valued richly and will continue to be priced at a premium, and we'll have to maintain that.
All right. Since we're talking about consumption stocks, two more stocks I wanted your view on. One of them is Nika, where the company talked about how the combined net sales value of all their BPC businesses will grow at low to mid 20s, which is not a bad thing. I mean, on a year-on-year basis, that's one. And the other is there's a big upgrade on Sula Vineyards this morning. So both on Sula and Nika, would you buy the name? Would you hold for the longer term?
So, Sonia, Sula definitely, I'm not too much of a Nika consumer or fan, but Sula, yes, very clearly. I think the change in the duty structure is extremely favorable. It helps them gain market share, establish bigger presence, and deepen their, efficiencies wherever they want to kind of expand with this kind of a relief of sorts in terms of the earnings. So the margins was always a little bit of an issue, and this takes away that burden. So my sense is you will see a little bit of interest come back to this particular name. On Nika, my personal listing is that they'll have to continue giving better numbers every quarter, every month for able to justify the kind of valuation that they've always been at. So I would give it some time. These new age businesses haven't yet delivered except for a Zomato, which probably seems to be a turnaround. But my bet would probably be on Sula out of the two names that you mentioned.
Prakash, hi, good morning. The one sector which was the standout performer was real estate, largely in the first half of the week, the last one. I was looking at Sobha, 30%, in the last 5 sessions. Not so much with other names. Sobha, of course, was the clear standout within real estate. What from here? And what do you think happened there?
No, I think, if you look at, good morning, Prashant. See, Sobha came into different geographies in the last couple of years, but it took them time to start making some headway, whether it was the NCR, whether it was, even markets in Western India. It's now that Sobha has started seeing that inventory build up into a realizable state. So once that is there, what happens is that all your investments, your return ratios, everything starts kind of getting into a favorable zone. And from that perspective, they've broken this jinx that they had that they were a South-based company or a Bangalore-centric company. So from that perspective, it's probably the only player which is fairly national and has a pan-India presence that's growing, that's getting well established. But otherwise, real estate has always been a very regionalized kind of a localized kind of a thing. So from that perspective, I think people will like the resilience that Sobha offers from its portfolio. But if you really ask me, the recent GDP print talks about a very high improvement in construction. The estimates are fairly robust, 10% plus, means that real estate will continue to benefit going forward as well. So there's no reason to be worried, though it's been the best performing sector in the last calendar 23 also. But my expectation is real estate for the first half will continue to do well. And then probably you'll have other sectors coming into the picture. So you could look at some of the names which offer opportunities. Last year, we had spoken about a small business out of NCR called Tata. Look at how they've performed. So some of these unsung heroes are the ones that have actually delivered more. But from the larger names, Sobha and Oberoi probably still stand out given the balance sheet strength and the presence that they have.
Okay, well, stay on. We'll come back to you in a bit. We wanted to also discuss the crude prices and the volatility there. Probal Sen, energy analyst at ICIC Securities, joins us now with his call on the oil and gas sector and how he's approaching it. Probal, good morning. I want to ask you about first, a couple of specific stocks, right? First on Gujarat Gas, how are you looking at things considering that sharp fall that we've seen in spot LNG prices and the increase in propane prices? Is this a good time to be looking at the stock in general in this whole CGD space?
With Gujarat Gas, I think one has to look at two things. One, absolutely tactically, I think the stock will continue to probably show strength over the next few months because, as you rightly mentioned, it has literally become a single issue play in terms of propane versus gas. So the recent uptake in propane prices back to about $610, $620 a ton versus, I think something like $500, $520 a few months ago. versus, LNG prices obviously softening a little bit down to about $15.5. So that's obviously good news from their price competitiveness perspective. Having said that, if you look at the futures prices of propane, we see that the trends are once again trending towards $520, $550 a ton. And therefore, the uptick in terms of either margins or volumes, depending on how Gujarat Gas wants to play it, will not really last for a very long period of time. Is what the basic point is. Because LNG prices, while they are down, the fact is that they are still at about 15.5. If you look at spot prices, and term LNG prices, at about $80 will also be around $11, $12. So on the whole, I would say that probably for the next couple of quarters, you are likely to see a recovery either in volumes or margins, or both to a certain extent. But after that, one has to still look at the propane pricing trends, and more importantly, the trends from the new area volumes to reduce the dependence on Morbi, to look at it as a structural play from a 12, 18-month perspective. That's how we are looking at it.
All right. Hi, Prabal. Good morning. Good to see you in as always. What's the current rating though on Gujarat Gas?
We have a reduced rating, to be honest. We advised customers to, investors rather, to sort of sell into this rally.
Okay.
That has been basically our view, that, this rally will provides a good stepping off point, because if you look at slightly longer term, the prospects remain fairly murky from a volume growth perspective. So that's what our rating is.
Got that. Lower spot LNG prices, what does it mean for Petronet LNG, Prabal?
Again, the lower prices obviously means that utilization at the Dahej terminal should actually look up and remain strong for the next few quarters. Particularly spot LNG being down obviously provides an opportunity to make slightly stronger trading margins. So that's something that should help their cause as well. So on the whole, we're a price taker, whether it's oil or gas. At the end of the day, softer prices actually are a benefit for pretty much most companies in our space.
Prabal, hi, morning. With the oil marketing companies, IOC, HP, BP, what's the call now?
My apologies, I won't be able to talk on ratings for IOCL and BPCL. We have a restricted, stance on that for, banking reasons and other reasons. So on HPCL, we continue to remain positive. The very clear message that has been coming across from the government as well is that there is no urgency to pass through any significant fuel price hikes. I think the minister made a comment earlier as well last week, and probably even today, that there's not been any discussion specifically on fuel price cuts, which also suggests to us that as and when the cuts do come, and the margins are at a level where the OMCs can look at reducing prices, they won't be probably at uneconomic levels. So once if that is out of the picture, then the combination of still decent refining margins and very strong marketing, along with the expansion specifically in HPCL in the refining portfolio and addition of petrochemical capacity, I think makes it a stock to look out for from even a 2 to 3 year perspective, as far as we are concerned. You would be very positive on that.
Okay. And finally, on Reliance, what is your expectation? Numbers expected mid-January. How are you going into the earnings this time?
Reliance, I think, should report a 14% YOY improvement in EBITDA as far as we are concerned, and probably an 8% YOY improvement in PAT. So to that extent, I think another strong quarter. On a QOQ level, I think there is a little bit of reduction in OTC segment earnings that we expect, because obviously refining throughput got impacted because of some maintenance-related shutdown. Petchem earnings continue to remain weak, but all the other segments should actually still deliver a pretty reasonable quarter for the company.
All right, we'll let you go on that note. Thanks a lot for joining in. That's Prabal Sen of ICC Securities with his view on the oil and gas space. But you know what? We have about 15 minutes left for the markets to open. Anuj is joining in for a quick trade setup. Anuj, hi, good morning. It's been all over the place for the market. Little caution is definitely there in the system. But how are you feeling about things to come?
Indeed, Sonia, good morning. Nigel, morning. Prashant, morning. Good to have you back. I'm expecting more volatility. And the single biggest reason for that is the US 10-year bond yield. If you see that, that's been inching up. It's now gone up to 4.05. So it's no longer just a dead cat bounce. And that's pushed back the expectations of rate cut from March, which perhaps was a bit outlandish, to something like June or July. But that's leading to some kind of volatility in the mother market, and that's actually something which is visible in other markets as well, back home in India as well. And the January month is known for being volatile, and it's living up to that billing. Now, two levels to track, the series low and series high. 21,500 has been the series low, and 21,834 has been the series high. My sense is the direction will emerge once you break either on the upside or on the downside. Let's see what happens. Of course, earnings season is the next big cue. We have Infosys and TCS both coming out with numbers on Thursday, and then Wipro and HCL Tech on Friday. Coming to levels then, on the Nifty, the levels I'm watching out for. First, on the upside, 21,750, Friday's high, and 21,834, the series high. They'll act as some kind of resistance. And the support on lower levels is placed at 21,629, Friday's low, and then, of course, 21,500, the series low. I think it's the Bank Nifty, which has again become a bit volatile, and that's where you have some selling as well, especially the way HDFC Bank reacted. Now, the first support is 47,823, and then bigger support at 47,500. On the upside, 48,382 and 48,636 are the levels to watch. As I said, HDFC Bank's reaction to quarterly update was actually quite poor. The way it ended almost at day's low. And ICICI Bank is the other big stock to track. It's repeatedly halting at its 20-day exponential moving average. So, you need these two stocks to move for the Bank Nifty too.
All right, Anuj, thanks very much for that. So that's basically the trade setup as Anuj sees it. We'll take a quick commercial break here with our, we'll be coming back with our technical experts on the other side. We have Mitesh Thakkar and Sudarshan Sukhani joining in to help us with that in just a bit from now. Stay with us. Okay, welcome back. So you got the GIFT Nifty indicating a 20-21 odd point lower start. Mitesh Thakkar is with us, and so is Sudarshan Sukhani to help us with what the trade setup looks like. Gentlemen, good morning. Good to have both of you here. Happy New Year to both of you. Seeing you for the first time in 2024. Mitesh, how are things looking? Last week was flattish, absolutely flattish. But do you expect? But the US was down about 1.5% on the S&P. Is it looking a little more muddled out there, or is it clear?
Morning, Prashant. I've been advocating that we have gone into a consolidation. It is not a declining market, but the uptrend has kind of stalled. It looks like a range between 21,800 and about 21,480, give and take about 30-40 points. So broadly, it will be a market which will be sideways, and traders therefore have to adjust from a trending strategy to trading kind of a strategy, which means that you try to enter near supports, keep tight stop losses, and be nimble in taking profits. Similarly, on the Bank Nifty, the range is about 47,500 to about 48,450.
Okay, Sudarshan Sukhani is also with us. Sudarshan, it has been a volatile market, yes, but it's also been an uptrending market, so to speak, right? Nifty is still hanging on to about that 21,700 mark. Do you think we can build on to these gains in the next fortnight or so, or are you a bit skeptical now?
Good morning. See, it's been volatile for the last 8 or 10 days when the markets became choppy and sideways. Earlier, we were seeing a one-sided rally. That process has come to an end. I don't think we are going to see similar one-sided rallies in the near future. My view for January is not very optimistic. We'll be chopping around like we have been doing for the last few days. 1 day up, 2 days down, 2 days up. And this, chopping trade is very difficult to capture. So for short-term traders, this is not going to be an easy month. It is possible to say that at the end of January, we are 200 points higher, but most traders won't be able to capture it because of the up and down movements. So my view is, because the trend is up, traders should still look to buy, but on significantly sharp dips, say 150 points lower from the highs, then at least your risk becomes limited for a short-term trade. Otherwise, expect a lot of choppiness and understand that you have to manage it.
Okay, choppiness is what we're expecting, and only if you get a deeper cut on the Nifty, you look to buy into it. So Sudarshan, tell us about individual stocks though. What are your top picks?
Yeah, sure. See, it's a mix. Balrampur Chini is an intraday short. The stock had that large decline about 3 weeks ago, and it's not been able to sustain any small rally also. So that's an intraday short with a stop above 410. MCX went and had a handsome rally. After that, it's been trading in a range for almost 1.5 months. That may be distribution. So that is again an intraday short. Actually, it's also a positional short for those who want to buy puts and then take a take a downside view. Stop above 3200. Coforge is a buy. Coforge and HCL Tech have similar charts. I just picked up Coforge. That's a buy. It's fallen to a support level which has held for a long time. 59.50 is the 5900 is the stop loss, and buy with a stop at 5900. And finally, there are stocks that keep on going up, and because they are not, let's say, glamour stocks, we always forget about them. One of them is Colgate. Colgate has rallied from 1900 to 2500, and a silent rally. That's in a consolidation that probably has more steam on the upside. So buy Colgate with a stop under 2490.
All right, thanks for that. Mitesh, what about you? What would your stock ideas be for the day?
I have a mix of buy and sell calls. So on the buying side is Birla Software with a stop at 700 or just below it and a target of 745. Amar Raja Batteries, which is ARENM, that's a buy with a stop at 818 for targets of 870. And on the sell side is Shree Cement. We had a call earlier as well. Big breakdown with volumes. Sell here with a stop at 27,500 for targets of 26,000. And iShares has been on the sell list for a few days now and still can be sold with a stop at 39.20 for a target of around 3,800.
All right, gentlemen, great to have both of you. Just one, before I let you go, Mitesh, anything, how is DLF looking? I'll read out the news a little later, but technically, how's DLF looking, Mitesh?
Prashant, in majority cases, the real estate stocks, they've run up very well. And while the structure on the medium and long-term chart is very good, again, I think, you would now want to see a pullback to the 10-20-day average before buying afresh, because purely from a risk-reward equation on a trading point of view, I think the stock is slightly on the overbought side.
Got that. DLF has recorded sale of luxury residences in Gurgaon for over 7,200 crores. So it looks like another blockbuster launch, which has got sold out very, very quickly once again. So, we were talking about how real estate did very well last week. Luxury, high-end is continuing to see blockbuster demand. More on that. We'll take a quick commercial break here. We'll come back and discuss DLF, and we'll connect with the president of FADA. We'll turn the gaze to the auto sector as well on the December sales data. Stay with us.
Welcome back to Bazaar Morning Call. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio. Let's get straight to the F&O markets now. Chandan Taparia, derivative and technical analyst at Motilal Oswal, is with us. Chandan, hi, good morning. There is a lot of volatility in the market, but how are you feeling about the texture now? And what's your view on individual stocks?
Good morning, Sonia, Prashant and Nigel. Thanks for having me. So market got stuck in a range. On downside, it is finding multiple support near 21,500 zone. But at the same time, hurdles are visible near 21,850, that is a lifetime high marks. So we believe that some sort of move will be there in this broader range with volatility. But overall, till it holds about 21,500 zone, we can continue to be with buy on decline stance, because on weekly chart, the index is making higher lows from last 9 consecutive weeks, which clearly indicates the trend is intact. Even the pace of momentum and buying is now getting lesser in the market. So those who are holding the position or wants to create new position continue to be with trail stop loss of 21,500 with the view that index can again surpass the immediate high and head towards 22,000 and higher marks. Now talking about Bank Nifty index, Bank Nifty also got stuck in a range, but supports are visible at rising trend line. So we believe that till it holds above 47,777, one can look for an upside move towards 48,500 to 48,636 zone. Now looking at the stock wise, first is buy on Exide Industry. We have seen a buying interest in the counter, and it has been making higher tops, higher bottom on the daily and the weekly scale. Rollovers were better from December to January, and supports are now gradually shifting higher. So recommending to buy on Exide with support of 320, and here we have a target to us 347 level. Second trading area, that is buy on Axis Bank. Axis is one of the strongest counter in the recent past. Technically, it is completing a pole and flag pattern, which has bullish implication on the weekly chart. Supports are gradually shifting ahead. Recently, it took support near 1080 and witnessed recent recovery, which is making for a perfect momentum trade in the counter. Put writing with delivery volume also indicate an upside move towards 1188. One can buy with support of 1115 level. Last trading area, there is buy on LNT. We have positive view on the capital goods name, and LNT is one of the strongest counter. It is forming higher top, higher bottom, and at the words of the fresh breakout. So one can buy ATM call or can buy with support of 3470, and stock can rally to us 3700 zone.
All right, thanks a lot for that, Chandan. Have a good day. Thanks for joining in. Let's focus on the auto sector now. The Federation of Automobile Dealers Association just released their report for the month of December, where they spoke about how auto retail sales have surged 21% in December. And across the board, actually, two-wheelers have grown by 28%, three-wheelers by 36%. Passenger vehicles have been quite slow, to be honest, just a 3% growth, and tractors as well, barely growth over there. But the two-wheeler space has grown quite a bit, almost a 30% growth. Manish Raj Singh, the president at FADA, joins us now to talk about that. Manish, good morning and thanks for joining in. December was a decent month in terms of auto retail sales, but how is the month of January looking so far? There is this Kharmas inauspicious period as well that extends till the 15th of Jan. So demand has been slightly on the slower side. But in general, what are you expecting by the end of the month and as we head into, the first quartile of this calendar year?
So December and overall calendar year ended very well for the auto industry, and we created a lot of new highs and new records for the calendar year. And December has also been quite good. In spite of we entering into Kharmas, please understand that we also have a lot of marriage season starting post Kharmas, and Pongal and Makar Sankranti, such kind of murals are already there in month of January. And normally the last quarter, that is of the financial year, that is the Q4, that ends up pretty well for the auto industry, and it is one of the brightest quarter for the auto industry. So overall, if the supplies are good, and looking at the new model launches that are coming up for the auto industry, both in two-wheeler as well as passenger vehicle space, and the continued excitement of SUV segment, we are looking at a positive growth of single digit across various segments. And I think PV as well as two-wheeler will continue to perform well in the last quarter of this financial year.
Actually, after a very long time, we heard a lot of positive commentary coming from the two-wheeler guys, especially, makers like Bajaj Auto that said that now things are improving quite a bit on the domestic front in the 125cc plus segment. But now also the lower end of the market is starting to recover. What are the big trends that you're noticing within two-wheelers? And do you think this 30% growth we've seen in December is something that can be replicated in Jan and Feb?
So till August, two-wheeler industry had been struggling, dealers had been struggling. We were not able to kind of, get the requisite retail. In fact, we are degrowing, and the primary contribution was from the rural market. Rural was not doing well, kind of, and it was lagging behind. And 70% of the two-wheeler sales come from the rural market because predominantly two-wheeler retails is dominated by bike segment. But post September onwards, we are seeing a positive trend and things have changed. In the festival times, customers have really come out and bought vehicles. And I think because of good crop output, also it has contributed in rural fund flow. And I think overall optimism in overall economic development plus the government spend, this has all contributed towards positive outlook in rural segment. Looking at the current stock level with the available with the two-wheeler dealers, and while getting an estimate from them, they are very positive about the January onwards months. And in fact, there is a shortage of available models at the two-wheeler dealerships. So I think last quarter for two-wheeler dealerships, and looking at the new model launches and the realization of their crop output and increased MSP, all this would definitely contribute towards double-digit growth in two-wheeler segment.
Okay, double-digit growth in two-wheeler segment. But the problem pocket really is the passenger vehicle space, right? There was a sharp correction in the dispatches in the month of December. There is an indication of a moderation in demand in the passenger vehicle space. Why do you think that is? Inventory levels are also quite high. And do you expect this sluggishness in PVs to continue in Jan and Feb?
So the biggest disturbing point about total auto retail space is the paid-up inventory available at the dealerships. So we just calculated, from January to January 22 to December 23. If you just, take the total wholesales and minus the total retails, the total stock level of top 5 manufacturers, OEMs, PV OEMs, stands at 5.65 lakh vehicles. So that's pretty high. So that assuming that we can comfortably say overall stock level available across dealerships would be around 6.57 lakh vehicles. So that's almost close to 2 months build up stock. So that's the biggest worrying point. I think OEM really need to correct their wholesale figures. They need to further lower down their wholesales to come at a comfortable stock level for the dealerships so that they can be profitable and they can be comfortable with the market trends. Just piling up stocks at the dealership is not the solution. And we need right models, what customer exactly is demanding, that should be available at the dealership so we can comfortably retail it to the right consumer.
Just wanted your thoughts also on tractors finally before we let you go, because the one standout trend now is that the crop harvest has been delayed and even, the Rabi sowing has been on the lower side. So that has hit the farm segment quite a bit. Do you think this tractor space, which has undergone a slowdown in the last couple of months, do you think it will continue to struggle in the months to come?
So I think tractor was already on a very high platform. We saw phenomenal retail in tractor segment. And now tractor retails are not only being contributed towards from the agriculture or farmer segment. It has also, come as a means of employment for the rural youth. And when people migrated back to their hometowns during COVID, it has comes as a means of transportation, whether it is ferrying people or bricks or sand or whatever. I think this segment still holds tremendous potential in spite of reaching a new high, new peak. Because it is exploring other segments, other strata of opportunities and businesses where tractors can be used.
All right, we'll leave it at that. Manish, thanks a lot for stopping by and speaking to CNBC TV18. That's the president of Tata. But you know what? There's plenty of stocks that are moving around today. So let's get straight to that. The pre-opening rate has settled higher by about 34 odd points. So it looks like the Nifty will open in the green. Titan is going to be leading from the front after the kind of update it came through. The jewelry division has grown at 23%, so keep an eye out on that. Tata Steel has been the best ever Q3 sales, so Tata Steel also sequential growth looking good, and that stock is in the green. But Mitesh is with us. Mitesh, what's the big call at 9:10?
Yeah. I'll go with the buy on Birla Software. Keep a stop below 700, 745, 750 should be the first trading target.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's get in Vivek, who broke that big story in late trade on Friday, and L&T was the top outperformer. Vivek joins us to give us a quick analysis on that set of news, and what does the street have to say about it? Hey, Vivek.
Well, good morning. Absolutely. So on Friday, in the dying minutes, like you mentioned, we did mention about how certain reports were indicating that L&T is favorably placed to go ahead and win at least one EPC contract from a very large tender that Aramco is currently coming up with. This particular tender pertains to a Safiniya oil field, and the size of the tender, for both of the packages that have been mentioned is close to $5 billion. So sizable tender even for L&T. So today, what's actually happened is that, while L&T remains in focus on the back of that particular development and we wait, in case the order does fructify, today, interestingly, a couple of brokerage notes too have come in on L&T. Number one, UBS has come out with a note. They've maintained their buy stance. They've raised the target price to 4,400 rupees a share. They're saying that investor concern about increasing exposure to the Middle East is unwarranted. Remember, Middle East margins are slightly low. But what they're saying is that, L&T focuses on the large in value and critical projects higher in the value chain. So it's in a better position when you're comparing it to a subcontractor. Along with that, there are lower time delay risks as well as better ROCE profiles. So on the back of that, they're saying that no worries as far as the Middle East concern is, or the, Saudi exposure is concerned. Interestingly, Citi too has written a note. What have they done? They have opened a 30-day positive catalyst watch on L&T. They're saying that the oil and gas space in Saudi Arabia is seeing strong tendering activity, and the company is favorably placed here. So what they're saying is that there are continue to remain further upside risks to order inflow estimates, which will be taken positively by the market. They're expecting the core margins to show signs of bottoming out in the third quarter. Remember, core margins have been a bit of a concern for L&T.
All right, thanks for that. Abhishek is also with us. He has a report Macquarie has written on financials. Abhishek, what does it say?
Sonia, to begin with, they expect bank earning to slow down in FY25 versus FY24. So ROAs have peaked for PSU banks. They will be at around 80 basis points over the next 2 years compared to 1% that they have recorded right now. NBFCs, the EPS cut are larger, given the fact that growth and margins will take a hit and credit costs will normalize. So they prefer large banks given compounding opportunities and lower valuation. They remain cautious on insurance, PSU banks as well as fintechs. So their pecking order is large private banks, followed by housing finances, followed by vehicle finances, then insurance, then consumer finances, then PSU banks, and at last the fintechs. Amongst the top picks in banks, they have HDFC Bank and IndusInd Bank. Amongst NBFCs, they have Shriram Finance and LSE Housing Finance as the top pick. So they have upgraded Axis Bank to outperformance from neutral, and they have raised the target price over there. Apart from Axis Bank, they have several downgrades like SBI, Bank of Baroda, SBI Cards, Bajaj Finance, Chola, as well as LIC India. Back to you.
Right, Abhishek, thanks very much for that. Well, let's revisit Sula as well. Mangalam is here with that one. Mangalam.
Well, Sula was up almost 10% in Friday's trading session, and this after the Maharashtra government, we understand, has gone ahead and revived the wine industrial promotion scheme. This was earlier introduced in 2009 itself, and as a result of which wineries who were charged 20% as VAT will now be eligible for getting 80% of that as a refund itself. CLSA has written on it. We had the Wine Association head joining us on the channel as well. CLSA has upgraded the target price on Sula from 571 rupees to 863 odd rupees, because they believe that this reinstatement should focus on volume growth coming in for the company, and because they have over 50% share here, they stand to benefit the most. At the same time, they've also upped their FY24 to FY26 EPS estimates by anywhere between 0 to 4 odd %. So expect some up move on Sula to continue.
All right, thanks a lot for that. Well, let's do one thing. Let us get the big stock of the moment, DLF, where the company has said that they've recorded sales of their luxury residence, DLF Privana South in Gurugram, for 7,200 crores. Akash Ohri, the Group Executive Director and Chief Business Officer at DLF, joins us now to talk about that. Akash, it's mind-blowing. Within 72 hours, you all recorded this kind of sales. But just take us through the demand, the numbers, and what does this mean in terms of your overall pre-sales number for the full year?
Yeah, thank you for having me on the show. Truly grateful, extremely humbled by this response. The business has come from all over the country and outside, especially the NRI segment. And I think right now, as far as the pre-sales are concerned, we should be hovering around the annual guidance that we gave for the year. So yes, it's been pretty good this quarter. The response has been overwhelming.
Akash, hi, morning. Could you tell us what's the ticket size? I mean, average ticket size for these units?
Average ticket size is about 7 odd crores.
Okay.
About 7 odd crores.
And okay. Sorry, go on.
Sorry, go ahead.
No, you finishing the point, please.
Yeah, so it's about 30. They're just one-side apartments, and they range from about 6.25 to about, say, 7.5. And this is at a new area called Purana.
Sure. So you're saying
where the entire ecosystem is being built.
Got it, got it. You're saying business has come largely from the NRI segment. Your bookings have been in the range of around 2,200 crores on a quarterly basis. What does this take your average bookings to in the second half of the year?
The second half of the year, so quarter 1 and 2 have been about 2,200. This quarter will be, say, with this particular thing, and the 2 launches, Panchkula as well as a commercial launch in Gurgaon, will take us to about 9,000 odd. We're yet to compile the data, but quarter 3 would be around that much.
All right. Hi, Akash. Morning. Nigel on this side. For the year, what kind of a number do you think you can end up with this sort of good response that you're seeing?
Well, right now, we've got a couple of things going for Q4. Nothing finalized, Nigel, at this point in time, but look out for this space. Yes, it's been, as I said, overall, the response has been pretty good.
You want to give us, Akash? Akash, you know, the numbers are looking so good. Luxury demand on ground is so good. Give us a broad band at least, you know, that we could work with towards the end of this year for FY24-25.
I don't want to speculate. We've done our guidance for the year. We've got a couple of projects lined up. We'll have to prepone them for Q4. But looking good. I just like to leave it at this point in time. But just one correction there. NRI has just been about 20-odd% of this entire sales. So 80% has still come from the rest of the country. I mean, primarily the NCR and the rest of the country. But these are also one more very important fact that I want to let you all know. Unlike the 5-10 lakh rupee booking amounts, this time the booking amounts have been 50 lakh rupees. No bulk bookings, one apartment to a family, and so on and so forth. So basically, the point I'm trying to make is these are retail and consumers, mostly people looking at moving in.
And which means drop-offs, etc., would also be much lower, right? That's an important point that you make. Akash, could you... so that a point about the overall year, for the full year, could you give us a ballpark? What can we work with without getting into very specific numbers or anything? Because you look to, you know, it looks like you'll handsomely beat what you said you would do as a full year guidance.
No, so full year guidance, as you all know, we would have met by finishing of Q3 the way we did. So that guidance, I think, is done now. And now, as I said, there are a couple of other projects lined up for Q4 that I'd like to announce as we come close to that. But we are working on two big things. So you know, let me leave it at that right now. But
could you be closer to 20,000 crores?
I won't speculate. I mean, our product pipelines are far greater than that. I'd see how much we can prepone, you know, bringing that in, because as you know, guidelines and regulations. I don't want to speak about products that are yet to be finalized and especially approved. But yes, I mean, we're excited with what we've done so far. We'd like to take one day as it comes.
Got it.
As I said again,
Akash, the street is also quite excited. Actually, the stock is up about 1.5%. Just before we let you go, is there a fresh launch, a new launch expected in this month itself, in the month of January?
Not in January, but definitely in the quarter, but not in January.
In the quarter. All right. We'll leave it at that, Akash. Thanks a lot.
Yeah. Thank you.
Sure.
Thank you.
Thank you for joining us. Well, that's DLF, clearly one of the big movers today. Demand is great in the luxury segment, but let's take a look at the market and some other stocks as well. The opening has been flat with a bit of a positive bias. The big movers this morning are Eicher Motors is up 1.5%. Titan, after the consumer update in the jewelry business, is up 1.5% as well. BPCL is up 2%. Oh, Sula, yes. So, we're talking about consumption, right? Whether it's buying gold jewelry, whether it's buying premium houses, whether it's spending on wine, everything is happening simultaneously in this market. So, Sula is up 11%. Big moves coming in there. There's, of course, specific news on that one. So, keep an eye out there. CLSA has raised their target price to 863 on Sula from 571 earlier. Remember, the Cabinet Ministry of Maharashtra has reinstated their subsidy on wines produced and sold in Maharashtra for 5 more years, and that should shift the focus to volume opportunities. So Sula looking pretty good over there, but many more stocks in the
Well, that's right. So, FIAM, their board will be considering a bonus issue. So, FIAM is up closer around 10% as we speak. From the broader market, that's one of the big movers. So, just pull up the intraday chart out there. GMR Airports, you had a large trade that took place in pre-open. Delhi Airport as well had not paid revenue during COVID, and there's an arbitration panel that's ruled in their favor. So the stock opened up a little bit lower because of the large trade, but from there, GMR Airports has recovered closer around 5%. Low of the day is closer to around 18. But we had a few operational updates that came in there, and some of these stocks are getting a hard knock. Godrej Consumer is down close to 5%. Marico is down close to around 4% as we speak. Aarti Industries as well. On the global front, there is some bit of a pullback in terms of supplies going to Europe. And they supply, I think, a key raw material out there. So even Aarti Industries is a little bit lower. And Bank of Baroda posted operational update. That one as well is a little bit lower. What's doing well then? The OMCs are doing well. HBCL is up 3%. IOC is up 2.5%. Shriram Finance is up close to around 2%. And we had the management of DLF that sounded very, very confident about the end of this year. We can see luxury demand as well, very, very strong out there. Well, that stock is up close to around 2%. So the Nifty has flattened out. The Nifty Bank is the one that's underperforming. The mid-cap index as flat as can be, but individual stocks doing a thing of their own. Prashant.
Well, Sula's 20% in 2 days over last Friday, and what's happening today. So that's a very large move coming through on Sula. Just a few names on the downside. Bank of Baroda is down about 2.5%. Maybe we can look at these names as well. Stocks at about 228. Godrej Consumer, I think we highlighted 5% lower on Godrej Consumer. Yes. Marico is down almost 4.5% as well. So Marico is taking a bit of a knock, 521 on that one. There is Aarti Industries. Sonal was telling us about that one, 3% lower, 612 on Aarti Industries. ABFRL is down about 1.25%. I think we mentioned Inox Wind, which is down about 5%. India Cements, Gujarat Fluorochem, which is, Fluorochem is down about 2% as well. And of course, the big winner from last week was Sobha, which starts a little softish this morning. Zomato is down about 1.5% as well. Stocks at about 131 at this point in time. So, that's the overall picture as things stand right now. BEML is another name I'd like to highlight, which is up about 5%. It's the other side. And there is Traxon, which is up 10%. So there are big movers on on the upside as well, apart from what we've already highlighted. Transformers and rectifiers is another one, which is up 6%, 281 on transformers and rectifiers coming through. There's more. We'll come back to this. Blue Jet, recent listing, 4% higher, and so on and so forth. But volumes are a little lackluster. Nifty, after being absolutely flat, has picked up a little bit. We're about 35 odd points higher, 21,750 is where we stand. Gautam Shah is founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Thank you very much for your time. January is, if you sort of look at seasonality, etc., and if you're trading, you'd pay attention to that kind of thing. It's not a great month, especially not if you're coming off a very, very strong December. Just your thoughts with where we are, Gautam. Are we ending something? Are we in the middle of something? Or are we just about starting something on the upside? What are your broad thoughts? Big thoughts, actually. Go on.
Good morning, Prashant. Well, I don't think we are ending something because I think we've been in this massive uptrend for about 8 years. As your team also highlighted, 8 continuous years of gains. So it just tells you that every single correction in the last 8 years have been bought into and the markets have come back every single time. However, as you rightly pointed out, I think the month of January does not have a good track record. In fact, out of all of the months of the year, it probably has the worst track record if you look at the last 25 years. At the same time, if you look at the months of November and December, it usually is a good period and we've had a fabulous November and December. I think a lot of positives are already in the price. In fact, I would even go on to say that exuberance is in the price. So I think the market needs a fresh trigger to do something special even from these levels. We are very, very overbought on the traditional parameters and on the breadth parameters. And obviously, if you add seasonality to it, these are levels where we don't think that the market can continue to gallop. In fact, in the last 10 days, you've had the Nifty stay in a 1.5% band. So 21,500 to 21,800 has worked quite well. And even if 21,800 gets taken out, you could see another 2-3% upside towards 22,200. But I do believe that the market is a little top heavy at this point of time. And the chances of a pullback at some point of time in the next few weeks is very high. So this is a time where one needs to be a little careful. One needs to be low on leverage. One needs to be conservative. And in case 21,500 were to break at any point of time, which I think is going to happen soon, you could see a pullback of about 3-4%, which I think is quite normal given the kind of run-up you saw in the last 2 months.
Chances of a pullback are very high, you're saying, but the market for now is not looking at that. The Nifty is up about 50 odd points. And plenty of stocks actually hitting fresh highs. Olectra Green Tech, a company that has been in the manufacturing of electric buses, It's been doing very well, great returns to shareholders, and that stock is at a fresh high now, 8% higher on Olectra Green Tech. So this market is definitely picking and choosing their winners, as has been the case in the last 6 months. Gautam, hi, good morning. Thanks for joining in. We have a couple of big events upon us, right? There is, of course, the budget. It's a vote on account, but nevertheless, it's an event that the market is looking at. There are the elections coming up. How do you juxtapose the technicals of the market with some of these big fundamental events? Do you think they could be game-changing, or are you still looking at volatility nevertheless?
Well, I don't think they could be game-changing, but definitely these are issues which the market will try to discount on a daily basis. And not just the budget. I think earnings itself, season is upon us, and I think that's also going to impact the markets because, as I said, a lot of the positives are already in the price. So I think I would just want to be a little conservative here. There are still immense opportunities in the market. I don't think today's market can be compared with anything that has happened in the last 20 years because the domestic liquidity angle has just changed the game and the entire framework completely. So I think what you're going to see is rotational correction. So pockets which are very overbought and which have run up a lot will go through its corrections, and pockets which have not done as well will continue to rally. In fact, our favorites in this market would be IT, pharma, metals, and chemicals. So these are the 4 baskets where we are bullish on and we are looking for opportunities. Even the banks, don't look too negative on the charts. I think the way HDFC Bank and SBI are placed, I just feel that the bank nifty will be safe, and that would actually lead to the entire market being safe.
All right. Hi, Gautam. Good morning and good to see you and wishing you a cracking 2024, Gautam. Tell us, but if you have to see a bit of a pullback on the headline index, that's on the Nifty, what could the quantum be? Where do you see us taking some bit of support?
I think, as I said, quantum and magnitude has changed quite a bit. Having seen the 2003-2007 bull market, 10% fall was quite normal. But I think in today's world, a 5% is a 10%. So in that sense, if the Nifty were to lose about 4-5% at any point of time, it should be considered normal and very, very healthy. So I think 21,500 for me is the line in the sand. If that were to break on a closing basis, you could see a bit of a dip. I think the only point which I'm trying to make is please do not take adventurous longs. I don't think medium-term and investment longs have any concern because the bull market is intact and you're going to see much higher levels. But in the interim, I think you need to see a little bit of a cool off. So 21,500 and probably 20,500 is the base because that was the number, which the market tested post the assembly election results. And I think that would now be the most important support, not just for January, but probably for the next couple of months.
Okay. You spoke about how banks could protect the market and prevent it from having this big fall, right? What about IT? We are heading into IT earnings as well, and it's looking tricky this time around. How are you positioned? Which side of the fence are you leaning towards?
Well, I would be positive. And in fact, we have been positive for the last few months now. And I remain of the view that the IT index is heading towards a level of 39,000, which I think is about 10% away from where we are right now. All of the top stocks, I think, look very well placed. Look at the rebound in Infosys and TCS. I do see TCS trading well above 4,000 very, very soon. And mid-cap IT has been a story in itself. I mean, if you look at all the top stocks, there is just no stopping. I mean, look at a Persistent, look at a Emphasis, look at a Coforge, Mastech. All phenomenal moves, and this is going to continue. So with IT and banks actually looking positive on the charts, it just gives me the feeling that maybe you'll not see a collapse, but you'll see a rotational correction in the market among various sectors.
Gautam, last week the Nifty real estate index went up 8%. Stocks like Sobha went up 30%. How is that one looking, and what are the best ideas in that area?
Well, Prashant, we discussed this a year and a half back, when I made the point that there was a breakout from a 10-year range, because post 2008 until 2021, real estate as a sector did absolutely nothing. It was in a big range. So when you have such big breakouts, the ramifications are also large. And that's really what has happened in the last 15, 18 months. Now, I think it's very, very overdone. I think just from a near-term perspective, you might have seen a buying climax, and the chances of a large cool-off is pretty high. So we've been recommending our subscribers to actually take profits in many of these winners in real estate, capital goods, auto, and maybe move to some of the other sectors. Not to say that the uptrend has ended and the bull market has ended. You might get a resting phase in between that could last many weeks, maybe even a few months before the next leg up. So I think this is a buying climax. It should be sold into.
Okay, what about pharma? Started off 2024 in style. That was a surprise, big outperformer last week, real estate as well as pharma. Do you think this year we could see the pharma index outperform?
It could be potentially a year for pharma. I think the structures are good. Many underperforming stocks have done well. I can give you 5 or 6 names. And I do see the pharma index moving towards a level of 19,000. That's the NSE pharma index. So there is large upside. And, the risk reward is excellent. Even at current levels, the downside is very limited. Look at the Divi's Lab, Dr. Reddy's, Cipla, Zydus Life. Very good setups. And at a 21,700 index, I'm actually very comfortable buying and, holding on to pharma for greater upside.
Defense has now become mainstream, right? After, being lying in the background for many years. So even as we speak, names like, say, BEML, Bharat Forge are all sitting at fresh highs. Do you see further gains in 2024 for the defense names?
I don't think so, Sonia. I think everything is being painted with the same brush. And I think there is just too much extrapolation happening in railway and defense. I do believe that it's very, very overdone. And these are levels where, when you are in gear 5, even a little bit of turbulence is sometimes difficult to handle. So defense, while it might be a great story from a 3 to 5 year perspective, but if you're looking to enter fresh, these are not levels. In fact, if somebody is bought at lower levels, take profits.
Okay. Well, all right, we will leave it at that. Thanks a lot, Gautam, for joining in. Appreciate your thoughts and the little bit of caution there in your voice. Let's see how things go from here. For now, very quiet, but Gautam Shah of Goldilocks saying that, things may get a bit tricky, some bit of volatility, some pullback is definitely something that's on the horizon. For now, the market is volatile. The mid-caps are in the red. The bank nifty is in the red. The nifty is soon to slip into the red. So I think the volatility is not over just yet. But let's talk about the ongoing conflicts in the Red Sea. Maersk has announced on Friday that it will suspend all shipping through the Red Sea for the foreseeable future because of the threat of attacks on its vessels. Freight rates have soared due to the Red Sea issue. To discuss the impact on India, Sunil K. Vaswani, the Executive Director, Container Shipping Lines Association, joins us now to talk about that. Mr. Vaswani, good morning and thanks a lot for joining in. Many industries are, under a lot of pressure because of what's happening with the shipping space and the Red Sea concerns. Just tell us, where are we at the moment? What is the situation on ground at the moment? And what is the kind of impact this is having on freight rates, on the industry overall?
Yeah, morning. As I mentioned the last time, that if things deteriorate, things could possibly get a little more concerning. And now, lately, as you would have known, the Maersk line vessel, Maersk, although they had announced getting back into the Red Sea, unfortunately, there was an attack on their vessel. And after that attack, they have suspended their services over the Red Sea for quite some time. I mean, it's indefinite till things improve. Quite frankly, the shipping lines have been, concerned with these attacks that are happening. And particularly recently, also, there was not only this attack, but also the US pulled out their aircraft carrier along with the 5 warships that were accompanying it from the Red Sea. Now, all this has left us in quite a vulnerable position, and we're left with no choice but to move over the Cape of Good Hope. Also, as far as the Indian government is concerned, I think the Indian government's efforts are very, very encouraging because recently they saved the Indian crew also of 15 members. But I heard some news items saying that the security to the Indian ships would be provided. I only hope that the same security will also be provided to the container ships, because container ships are essentially all foreign ships, and all or practically all of India's exports and imports are carried by these foreign container ships. So that's
Mr. Vaswani, I understand. I understand the situation on the ground. Can you help us with the rates? What are the shipping rates currently? How has it changed since this entire issue started? If you could just help us understand, and also what is your own prognosis of freight rates?
Yeah, so the rates to the US have gone up by about 70%. If you recall, I had mentioned in my last interview also that if things deteriorate, the rates could go up by about roughly 80%. So to the US, they have already gone up by about 70%. To Europe, I'm afraid the rates have increased more. They're more than doubled. In fact, almost tripled to Europe.
Wow, that is very, very large, right? And this issue is what, a month old?
Yes.
Now, right? So you're saying 70% hike in container freight rates to the US, and Europe has doubled basically.
More than double, almost close to triple.
And this is from which ports here in India?
I'm talking about essentially Nhava Sheva and Mundra.
Two ports like, I mean...
The European ports, North Continental ports, Mediterranean, and then when talking about the US, is essentially the US East Coast.
Okay. Could you tell us, if and just one more thing, sir, taking the route via the Cape of Good Hope. I was talking to some people in shipping, and they were saying that not only is it longer, there's an issue of longer. There's also it's a much tougher route because the seas are much more difficult to navigate. So containers go overboard, etc. So other costs like insurance costs, etc. also rise. Could you explain that? Yeah.
Absolutely. As I mentioned the last time, that the costs include insurance costs. They include the costs of chartering new ships because we are putting in additional capacity. So at least on the service, when you're going over the Cape of Good Hope, your transit time increases by a good 10 to 12 days. And for that, if you have to maintain that service, a weekly service, in a weekly service, say about 7 to 8 ships are put into the service. But that's when you're moving over the Suez Canal. But when you move over the Cape of Good Hope, because the transit increases by a good 10 to 12 days at least, you need to add at least another 2 ships, if not more, onto the service. So for putting in those 2 ships, the cost is more. The ships cost you, the charter hire goes up, not only because of the number of additional days that are involved, but also the demand for the ships. So the charter rate also has gone up.
Okay. Now, in the container business, how much is how does it typically operate? Are these do they all operate on a day rate basis? Are these long-term fixed price contracts which then will reset? How do the bulk of it operate?
See, it all depends line to line. They have their own systems. But as of now, because this is a kind of an emergency situation, the lines, those who have additional capacities are putting in their additional capacities, which also costs money. And on the other hand, those who don't are hunting into the market for chartering ships. And because they're hunting the market, the charter rates have gone up as well. So this all is adding to the cost. And also, if I may say that the buyers, the buyers of Indian commodities have, as of now, many of them suspended their buying because of the rates having gone up. But this suspension we don't see long term, because eventually if the trade adjusts by itself to the situation. So eventually when their stocks also start depleting, they will start placing orders, and the supply chains will get used to the longer transit because they will place the orders that much earlier.
Okay. In fact, I wanted to ask you about that. What is the, impact that this higher rates are having on industries? I mean, whether it is, say, the auto sector, whether it is textiles, a whole host of industries actually. Where are you seeing the maximum hit? Where have the orders been suspended the most as of now? And in terms of a timeline, what are we looking at? I know it's very hard to predict, but what are you looking at?
See, commodities, export commodities like steel, engineering goods, pharma, chemicals, textiles, agri products, they've all been impacted. But what I can tell you is that the commodity market, like agri products or some sort of chemicals and plastics, those exporters have shifted to the domestic market. They are focusing now on the domestic market. As far as exports are concerned, the reefer commodities are most impacted. Like right now, we have the grape season. So the grapes normally move over to Europe via the Suez Canal. But with the longer transit, these are perishables. So it's a question mark if they'll be able to withstand the longer transit. So those, of course, are getting impacted.
Mr. Vaswani, so your prognosis last time we spoke has come true, right? With the increase. Do you think they could jump, rates could jump more? If you remember back in, I think mid-20, maybe 2021, right? We'd seen container rates go up, but that was a different situation when the world was opening up after COVID, etc. we had container rates going up 300, 400%, maybe more in some cases. Do you think this could get anywhere close to that, or this will be contained here? What's your sense?
Yeah, so I don't think it would be right to compare the situation now with the situation during COVID or immediately post-COVID, because that was a difficult situation, a more difficult situation, I would say, and everybody was totally unprepared for it. So even the capacities were not available. Right now, fortunately, we have the capacities more or less by and large available, but only thing is there's a cost involved to it, obviously there's the demand and supply, the market goes up, charter rates go up. And as even the Indian exporters have agreed that there is no disruption. Initially, when COVID hit us, there was disruption to an extent, although everybody was trying to put the supply chains in place. But there was definitely some amount of disruption. Right now, there's no disruption. It's only the increased transit and the cost that's gone up. So as I said, that the market and the buyers also adjust themselves to the overall cost and to the longer transits, thereby placing the orders beforehand. So there's a difference. There is no disruption as of now, which is a major advantage that we have. It's a silver lining on the cloud. It's just that the cost has gone.
Absolutely. That's important to understand, and thanks for explaining that to us. I just wanted to understand one more thing. So India is now using some alternative routes as well, right? As we discussed, the Cape of Good Hope route, etc. But that would mean higher energy costs, higher insurance costs, maybe some piracy, safety costs, etc. that are involved as well. So just tell me that if this route is used more and more now, these alternative routes are used, apart from the higher shipping costs, what are the other ancillary costs that would go higher for companies that are exporting?
Yeah, the fuel cost definitely goes up because of the longer transit. The charter higher, as I said, because of longer transit, the charter is normally charter rates on a day basis. So if it's 10 to 12 days more, it's going to cost you that much more. And the charter rate goes up because of the demand. And of course, the insurance also costs because of the longer transit, the insurance cost goes up. But these are unavoidable. In fact, as far as the cargo is concerned, if I may just explain a little bit more, for cargoes moving over the Suez Canal, the Red Sea and Suez Canal, I understand that many of the insurance companies have stopped insuring even cargo. So the exporters, even if they want to ship over the Suez Canal, the insurance companies are reluctant to insure their cargo. So that also is hitting them as far as exporters are concerned.
Got it. So, I mean, with the situation as is, do you think this, of course, everybody will adjust to higher rates, that'll happen, but they'll adjust at much higher rates, right? Costs will go up to the extent where, with what's happened to shipping, etc. So I have two questions. In your opinion, which are the industries which will get impacted the most, and which will be, and which are the ones which will be able to take it in their stride? Indian industries, which you think, both via exports or imports? And second, do you think the situation will last for as long as the conflict in Gaza continues, or do you think it could be longer? Go on.
Yeah, I mean, definitely, as long as the situation in Gaza continues, this is likely to be impacted. But as I said, that it all depends on if the situation improves. If the Operation Prosperity Guardian, increases, their presence in the Red Sea, and if the Indian government also continues to protect ships, not only the Indian ships but also the foreign container ships, then the situation would not be as serious as one is fearing it to be right now. So it's all a wait and watch. Also, as I said, that in every situation, there is also an opportunity. So in this situation, there's also an opportunity for Indian exporters to look at new markets. I believe the Latin America market provides some sort of an opportunity for Indian exporters also, although the volumes will not be as large, but that's an area to look at. Also, Australia is another area to look at. So some of the other markets in the meanwhile, I'm sure the exporters also know this and they are focusing also on these markets. So these are also opportunities in the meanwhile that the Indian export community could look at.
All right, we will let you go on that note. It's tough times actually across industries. I mean, just when they thought the COVID situation was behind us, now this whole Red Sea issue has come through. So it's been tough for businesses across the board, but hopefully things should settle. Thanks a lot for explaining the situation to us. So shipping rates, container freight rates have surged 70% to the US and doubled to Europe. Some have tripled from ports like Mundra because of the Red Sea conflict. Not looking good at all for several industries that export. Let's slip into a quick break. The market is under pressure, by the way. Don't lose sight of that either. The Nifty is down about 56 points. Mid-caps are down almost 300 points. When we come back, Satish Vagh, the Chairman and Managing Director of Supriya Life Sciences, will join in to discuss an outlook on their 2024 business. We also have Vivek Lohia, who is the MD of Jupiter Wagons, to discuss their business outlook. Stay tuned.
Well, on the sidelines of the Tamil Nadu Global Investors Meet, my colleague Jude Sannett spoke to Mr. Sinha, the MD and CEO of Tata Power, about the solar and wind projects in Tamil Nadu. Let's hear out to what he had to say.
We already have nearly 500 megawatt of operational plants of solar and wind, and another 1,000 megawatt of solar and wind is under execution in different places in Tamil Nadu, which will come up in next 12 to 18 months. Apart from this, we are setting up a large manufacturing plant for solar cell and modules. This is in southern Tamil Nadu in Tirunelveli, and this is a 4.3 gigawatt of solar cell module, which is in very advanced stage of construction. Initially it was a 4 gigawatt, now we have gone for expansion, and the MOU will also be there for the expanded capacity. And apart from this, we are also exploring opportunities to set up more of solar and wind plants over here. Tamil Nadu offers great opportunity, especially for wind projects, because there are certain pockets where there are very good wind speeds, and we are looking at those opportunities. Apart from that, we are looking at some of the solar opportunities that can become, so that we can offer hybrid solutions to the consumers.
Yeah. Leaving the exploratory opportunities aside, insofar as the projects that you've confirmed with the Tamil Nadu government, what kind of an investment outlay will you be looking at?
So the manufacturing is 4,300 crores of investment, which is already ongoing. There is another 3,000 crores of plant that is coming up in terms of the solar plant, and another 3,000 for wind. So there's about 6,000 of the solar and the wind generation investment that has been made, and another 4,300 crores of manufacturing. So it's, you can say about 10,000 is already work in progress. Right. We see huge traction and opportunity for all these girls who are coming from that area. We've already onboarded nearly 1,000 of them, and we feel that this will create a lot of local employment and entrepreneurship opportunities for people around the plant.
Right. Looking beyond Tamil Nadu, so even as 2024 is just about started and we're looking at summer months approaching in about 2-3 months now, what is your outlook for the year? Coal prices have been going up. There is, of course, also talk about coal stocking itself. How do you see the new year panning out really insofar as the power sector is concerned?
So I think the power sector has seen tremendous growth in last 2 years. Every year there has been a CAGR of nearly 10%, and the demand of power has increased primarily because a lot of industrial activity has picked up, new manufacturing plants have been set up, a lot of commercial and activities have picked up, including the residential consumption has gone up. So I generally expect that the 10% growth that we saw last 2 years may continue in this year, and I think the Indian power industry will be able to generate enough power and supply to them. We sometimes have little challenges, but I think Indian power sector has done exceedingly well in last 2 years to meet the overall increase in demand that has happened.
All right, well, that's Tata Power. But let's talk about Aarti Industries that is in focus this morning. Sonal is here to tell us why she's tracking that one. Sonal, over to you.
Thank you for that. Well, remember, Aarti Industries entered into a long-term contract for an advanced intermediaries for an agrochemical major last week itself. They said they'll be getting around 300 crore rupees over 9 years. But now there's a setback that has come by because European Union has not renewed the license for a product for which Aarti Industries had to make this advanced intermediary for. So just to put it into context, the European Union has decided not to renew the approval of S-metolachlor, which is an agrochemical, and this is a product for which Aarti Industries last week won a contract for in terms of advanced intermediaries. So Equirus says that there could be diversion of volumes from European Union to other markets, and this will put pressure on the advanced intermediate in terms of volumes and pricing as well. And that means Aarti Industries will not see the volume offtake which it was expecting earlier because of this renewal that has not come by, because a big market in terms of European Union has gone away with this approval which has not come by. Now, UPL is one of the bigger producers which makes this final product. So that stock is also in focus because the European volumes will come down because of this. The Equirus also says that long-term contract of Aarti for the supply of the intermediate is also at risk and volume offtake would be lower. So yes, while they did win the contract last week itself, the volumes are going to be lesser than what they were expecting. And UPL also, the volumes will be lower for the final product. And that's why both these stocks are lower in trade.
Right, 4% lower in Aarti Industries, 600 around is where the stock is not trading. So thanks very much for that. Godrej, Consumer and Marico are also weaker. Let's revisit that with Mangalam. Mangalam.
Well, you know, both these stocks are lower by almost 5%. The common theme between both Godrej as well as Marico is the fact that their revenues in the third quarter will decline. But that's where, you know, the commonality ends, because for Marico, the internals are slightly weaker than that of Godrej Consumer. For Marico, the consolidated revenue declined in low single digits. Domestic volumes themselves grew in low single digits, and that was on account of weakness in their Parachute, Saffola, as well as value-added hair oils portfolio itself. The portfolio that did well for them was foods and premium personal care. They expect gross margin and EBITDA margin expansion too. For Godrej, the reported revenues will be lower, and that's largely because of currency impact or currency depreciation in Africa as well as LATAM. But apart from that, the constant currency revenue growth will be closer to double digits. Their volume growth will be mid to single digits. And in India as well, the reported volume growth will be in double digits, even though organic volume growth will be mid-single digits itself. Operating environment in India has been similar to that of the second quarter. The other positive for Godrej Consumer has been the Indonesia business, which reported double-digit volume growth and high single-digit sales growth as well. They too are likely to show EBITDA margin expansion, but the fact that reported revenue growths will be lower for both Marico as well as Godrej has the street spooked, and as a result of which both those stocks are lower.
All right, Mangalam, thanks a lot for that. Well, let's focus on Supriya Life Sciences. Now, the company's manufacturing site in Maharashtra has received a good manufacturing practice certificate from the Brazilian Regulatory Authority. To discuss this, what's the way ahead as well, we're joined by Mr. Satish Bagh, the Chairman and Managing Director of Supriya Life. Hi, Mr. Bagh, morning. Thanks so much for joining in. Well, you know, earlier when we spoke about conservatively, you were guiding for around a 22 to around 24% revenue growth for the year. And I think broadly you were talking about 570 crores. Now, we're getting in towards the end of the year. For FY24, what kind of a revenue growth you're looking at? Because the first half you've grown fairly well. Growth as well as margins, what are you looking at? And also CRAMS, that's going to be the growth driver, say, from 2026 onwards. So how do you see that business ramping up?
Sir, thank you very much for connecting me. As far as Brazilian Anvisa is concerned, I'm very positive and very happy to say last 2 years back, the Anvisa started the new regulations that for last 4 decades, China was only supplying the APIs to this market. Then they came up with the GAP certificate, and then Supriya immediately picked it, and we already have registered 10 APIs out of 15. And I'm hopeful within next 2 years, we will achieve at least 300 crores more in Latin American market, especially in Brazil. And Brazil, Anvisa has an edge on the entire Latin American markets, and that also will penetrate more and more. And we continue with a positive growth this year also and next 2 years also.
Okay, just to clarify some numbers, sir. So for this year, what do you end at in terms of a growth rate? Can you do closer to around 30% instead of the mid-20s that we were talking about earlier? And margin number as well?
Sir, as far as we concern, Supriya, we always talk on the percentage of EBITDA. That is the crutch of our balance sheet. So I definitely tell you, this year we will definitely have between 15% what we have done in last year, but EBITDA margins will continue to remain the same. And within next 2 years, the new therapeutic categories which we are coming, we will definitely find a way and penetrate more and more in the regulatory market. You know, currently Supriya is 43% in European markets. We have lots of CEPs coming in this market, which will give more and more value addition. And I personally expect that EBITDA is must.
Mr. Wagh, you said 20% earlier, right, when we spoke last time. You're saying a 15% growth now. So are you scaling your growth estimates lower?
Yeah. See, as far as me is concerned, I always say that whatever we are going to achieve, I always say less. But positively, we will do our best and we will achieve more. That's my say. I am little conservative on says, but we will do it.
Okay. Can you tell us, particularly in the CDMO market, what is the kind of opportunity that we're looking at? What are the customers and acquisition? What's the potential revenue over the next 2 to 3 years?
You know, in CDMO market, we have recently, and we already have announced that we have joined hands with DSM. DSM, one of the vitamin, is totally getting sourced from us, and they will be closing down the plant at Switzerland. So that's one which has come from the CMO and CDMO activity. We are also working on the 2-3 products which protein is there. You know, we have already signed with the American company where whey protein is coming up. And the whey protein is a technology patented, which we have a rights of 20 years. It's a commodity product, but largely getting consumed in India. We are going to concentrate more and more in exports than the consumer market.
All right, Mr. Wagh, you're saying that the Latin America opportunity could be huge for you. Earlier, China was supplying. Now you believe a company like yours can benefit out of there. You also have additional capacity that's coming on stream. And you're talking about scaling up the CDMO opportunity. So let's take a 3-year horizon. In the next 3 years, last year you delivered a revenue number of around 460-470 crores approximately. 3 years from now, can your revenues more than double? If yes, if you could tell us what could the margin guidance be as well. Please go ahead.
I am quite confident we will double within next 4 years. And our the percentage, that's EBITDA, that will continue. We always concentrate on margins and EBITDAs. And that company has an edge in the European market, as far as Latin America market is also there. And we will continue the best in this area because, you know, I told you, 4 to 5 decades, China was only supplying. This year, when we decided to go for Anvisa, we have requested Anvisa to come and audit our plant. And we are very happy with 0 findings. We have cleared the audit.
So FY26, you'll double your revenues, correct?
Yeah.
All right.
Even
we'll leave
one
it there.
of the customer from Latin America has come forward with roughly around about 200 crores, 2 APIs, which we have already signed a CMO and CDMO activity with him. And I'm sure that particular customer will be buying more than 200 crores with a better margins.
All right, we'll leave it there, sir. Thank you very much for joining us, and I think we all appreciate your conservativeness, as you said. So stay conservative and then do better. I think that's the way to go. Appreciate you joining in with all of that.
Thank you very much. Thank you very much,
once again. All right, well, let's focus on our big winners of 2023. Jupiter Wagons is one such name. The stock is up to almost 250% in the last 1 year. We have Vivek Lohia, Managing Director of Jupiter Wagons, joining us now to discuss, what business looks like beyond FY24. Ms. Lohia, good morning. Great to have you with us here. Thanks very much for your time. Prashant this side. The last time we spoke, you told us that by the end of FY24, you should be up to about 800 wagons a month. Could you tell us what is the status right now, and how's that plan going into FY25 as well?
Good morning, Prashant. Thanks for having me in your channel. As you rightly said, that we had mentioned that we will go up to 800 wagons, and we have been always very conservative in giving our forward numbers. So we are already now this month we are close to about 850 odd wagons, and our target is that before end of FY24 we would be touching about 1,000 wagons a month.
Okay, 1,000 wagons per month before the end of FY24. Got it. You also received a fresh order from the Defence Ministry. Can you tell us a little bit about that? What is the order execution timeline? When will it start to show up in your books?
So the execution will start by end of FY25 and it will go over FY26. This is a continuation of we are already producing wagons for the Ministry of Defence, and this is a continuation of that particular design of wagons. So it is for us. In that manner, it's an order which is very easy to execute. And what we understand is that the Ministry of Defence is looking to further procure wagons to meet its requirements, and we are fully geared up for the same.
So can you tell us what is the exact number? I understand that this particular order is a little less than 500 crores, but what's the total order book that you're servicing from the Defence Ministry, and what is the order opportunity looking like, particularly from Defence over the next 12 to 18 months?
Yeah, so this particular order which we got is about close to 400 odd crores, and we have a earlier order book of similar numbers. I don't recollect the exact order book value, and what I can understand from the Ministry of Defence is that again very difficult to give exact numbers, but they are looking to further enhance their fleet in FY25 as well as FY26.
Okay, all right. Hi, Vivek. Morning. Thanks so much for joining in. Your cash flows continue to remain negative, though. When do they turn around?
No, I wouldn't say that. The cash flows are positive, and as our revenues go up and our EBITDA margins keep on increasing, we will be adding incremental cash flows. And the idea is to use those cash flows to further propel our growth. So we are looking over the next 2 years, we are looking to invest close to about 1,200 crores in terms of additional capex. We have recently done a successful round of QIP where we have raised about 400 odd crores.
Okay.
And the idea is to, make ourselves much more stronger by doing substantial backward integration, not only on the foundry side, but as well as on wheel sets, because we definitely also see an export opportunity there. And in FY25, you will see a significant execution in terms of our brake business also happening.
Okay, so the cash flows turn positive from now on, right? First half of the year was negative, so I asked you that.
Yeah, no, it is positive. Okay.
Got it. All right. Let's give us some guidance then in terms of growth. Order book is looking good. Business potential is great. What kind of a revenue growth number should we be looking at for FY24, 25, 26 from here on? And also, if you could give us a brief number in terms of profitability, which would mean margins.
So again, we are not in the business of giving forward numbers, but as I mentioned that in terms of our wagon execution capacities, we are significantly increasing execution. So over the current financial year itself, you are seeing around a close to 40% increase in terms of our wagon execution capability. That itself, again, you will see in terms of revenues, especially in even in FY24 and again significantly in FY25. As our whole idea is that, as we grow in size and we become much more cost efficient through backward integration and through delivering better quality products, definitely our EBITDA margins are going to increase quarter on quarter. And you have been seeing that happening over the last 1 year. And that trend, I think, will continue. The brake business, again, will be a significant contributor for that. We are now close to launching our electric vehicle. And we are expecting ARI certification this month itself. So around April, we are looking to launch that. So that will be, again, a significant new product in our bouquet.
All right, thanks a lot for joining in and all the best. That's Jupiter Wagons. They have a current order book of 400 crores from the Defence Ministry and they've just won recently won an order of about 470 crores. So they're doing lots of things in that space. The business is growing well, and so is the stock. But Mitesh Thakkar is back with us to give us his views on the market, which, by the way, it is under a bit of pressure as we speak. Not too much, to be honest, just about 30 points lower. Mitesh, getting a bit jittery now, this market. How are you positioned for the rest of the day, and what are the stocks to look at?
Yeah, so I think, basically it is still the part of the movement of which is, turning out to be a range-bound consolidation. So I think, you'll have this kind of ups and downs. I would still want to buy it once the Nifty is closer to 21,500 and take a 50-point stop loss from there and then see how it goes. On the stock side, I have a buy on Manappuram. I think, that's the stock which is doing well and could possibly see some follow through during the day. So recommend a stop at about 174, target of around 185 can be looked at. While on the negative side is PVR Inox. That's broken down today early in the morning. Keep a stop at 1640 and look for targets of around 1580, 1575.
All right, Mitesh, we'll leave it there. I want to throw more stocks at you, which I'll do in a little bit from now when we have you back. Thanks very much for joining us here on the program. We'll take a quick commercial break here. Manisha will be here and she'll put the focus on the commodity space. Stay tuned, that's coming up.
All right, it is a bit all over the place for the market, but there is a red hue. So we'll keep it aside for now and look at the commodity space. Manisha Gupta is joining us. Manisha, what's the one commodity you're tracking today?
Well, I'm looking at the index, and that is the FAO Food Index globally that looks at a lot of commodities, and we have seen a surprise decline onto that one continuing for the month of December as well. So we have seen an easing on a month-on-month and a year-on-year basis as well. So when you look at the numbers itself, well, this has been one of the biggest declines that we've seen in many years there. When you look at a month-on-month basis, last in the month of November was 120, and we're trading at 118 is how December closed. As compared to last year, it has been a big decline, as you can see, to the tune of almost 15 to 16 points there. That is a 10% decline on an year-on-year basis when you look at the food index global markets there. The overall numbers also are quite supportive here. The FO averages, the kind of decline that we have seen has been the biggest annual drop since 2015. And as I said, starting from January on how we ended December 2023, it has been a big 10% decline in overall food prices there. When you look at the year-on-year number, last year was 143 of an average. This year is 120 there. I also want to bring in a breakup of what we have done in sense of food prices in this current year until now. I'll start with cereal, and that has seen a gain of 1.5% on a month-on-month. But for the year, we have seen a 15% decline. Within cereals, it has been about maize, rice, and wheat. All of these commodities actually have been in the positive in this year, and that's the reason you have seen that month-on-month increase as well. When it comes to rice, well, this is where the major concerns are. All the Outlook 2024 reports that you will read, rice clearly continues to be a concern. So month-on-month, we are up by 1.6%. Year-on-year, we've seen rice prices gain up by 21% as well. Vegetable oil clearly was not a concern for inflation. Month-on-month, down 1.5%. And year-on-year, we are down by 32 to 33%, even 42% for some of the vegetable oils there. Sugar has been a concern. We did see prices go to a 15-year highs in the month of November, but December closed with a big amount of profit taking, so 16% of a chunk decline there. Year on year, 15% on the higher side still. So sugar prices continue to stay on elevated levels there. Dairy hasn't been a concern really because we've seen 16% of a decline globally there. Meat clearly on one side trajectory, which has been on the lower side, 1% down week on week, month on month, and 2% down on a yearly basis as well. Markets do believe that it's going to be really about cereals, wheat, rice, biofuels is what is going to be in focus in this year as well. Apart from everything else, it's going to be an easing inflationary pressures there.
All right. Manisha, thanks very much for that. That's basically what's happening with commodities. We'll take a quick commercial break here. On the other side, our special segment, Outlook 2024. My colleague Lata will get chatting with Abhishek Lodha, Managing Director and CEO at Macrotech Developers, to discuss the outlook for the real estate sector in this year, key trends, both premium and affordable as well. Stay tuned, that conversation up next.